Hello guys and welcome back to the channel. So in this video I want to tell you about something. I basically did the unthinkable and I sold 100% of my Tesla position after the Q3 earnings report. And this was very surprising to many of you, including me actually, because I went into this earnings call thinking that this is one of the most boring and inconsequential, I can't speak, it's too late. So inconsequential earnings calls over a long time, and you're either a bear or a bull, and you know the bears are going to see bear things and the bulls are going to see bull things, and I was like, yeah, whatever. And I'm in Europe, in Sweden, so the earnings call was too late for me. I stayed up and looked at the shareholder deck, went to sleep, woke up, started listening to the conference call, started looking at YouTube videos about the call, and I just got a really bad feeling that, okay, something like my thesis has been broken. And basically in this video, I want to explain to you my logic, why I did what I did. And yeah, just want to give you all the information so you can hate me in the comments and tell me how I'm wrong. And, but Vince, you're a trader now, and the Cybertruck is coming. And I saw all these comments on Twitter, okay? And yeah, so I just want to tell you my thoughts so you know, and you can make up your own mind. And if you're not subscribed, then please make sure you hit the subscribe button so you don't miss any of the videos. And if you want to speak to me on Twitter or X, it's the same name as the channel. It's @VinceIsBullish. So I want to say that I really thought a lot about this today. Obviously, it was a rushed decision, but I felt that I had to do what I had to do. So I had to, yeah, I spent even my work day whenever I could. I was looking at more data, trying to see where I went wrong with my thesis. And I was actually hoping that I will watch videos. And, you know, I even tweeted that I'm thinking about selling my Tesla stock. And I was hoping that somebody can give a good argument that would make me change my mind. But it didn't happen. So I have to preface this with that you have to understand something. I invest into growth companies, and I want to invest in companies that can grow. You know, my target is 20 to 30% per year for a 10-20 year period. And you have to understand that when a company is growing very, very fast, it commands a very high P. And Tesla has been a company that has been growing very, very fast. And it did have a very, very high P. And it makes sense to pay that very high P as long as the company is growing. The minute this growth disappears from the company, the valuation, at least in the short term, doesn't make any sense. And I want to explain to you that when I bought Tesla, the reason why I thought that it was a good investment is because I thought that Tesla was being fairly priced as a car company. So if you looked at how many cars they were producing, the gross margins, their operating margin, it was the best in the business, and how fast they were growing. And it looked like they were going to continue to grow that fast, right? Like their target was hitting 20 million cars by the end of 2030, which is a very, very audacious goal. And they were going to build, you know, gigafactories all over the world to make this happen. And I thought, okay, so I'm paying a fair price for just the car company, and this car company might, I'm pretty sure that it's happening, come up with full self-driving, which would lead to a robotaxi, and that would just blow up the valuation. It's like a pure cherry on top, because you're basically getting that for free. And then there's this ultimate call option called, you know, the Tesla bot, which is, you know, super exciting and super good, and it might happen in the future. And this was my thesis for buying the stock, okay? And I'm actually going to show you my my models and what I modeled out and what I think, yeah, the value of the stock is going to be based on the changes. So where I thought that my thesis broke is that, and I got a lot of comments on Twitter that I should have seen this coming earlier, and I didn't. I don't know if I was sleeping, but I also feel that it has never been communicated by Tesla that they are delaying opening gigafactories because the interest rates are so high and they're not able to move the same volumes as they're planning to, right? And then on top of it, they said in the earnings call that the Berlin and Austin factory is not fully ramped yet, and then they're going to very gradually ramp them from this point on. So what this means to me is that despite the price cuts, somehow Tesla has reached the total addressable market for the models that they have, right? So the only way that they can continue to grow really, really fast is they need to introduce new models like the Cybertruck or the Model 2 or the whatever, right? But if you're delaying the factory to make the Model 2, and you have to keep in mind that a factory takes 1.5 to 2 years to, to build, and then it's just standing there, then you still have to ramp it up. So maybe 3 years before you start to have any meaningful volumes coming out of that factory. So if you delay the factory from now, that means that the soonest amount of, the shortest time that you're going to get any Model 2s coming from Mexico is 3 years from now, but you're delaying it, right? And they also talked about the fact that Cybertruck, because that's another big catalyst, that they supposedly designed from a production viewpoint. They looked at like what's the cheapest and fastest and easiest to produce, and that's how they reverse engineered the car back, and that's how they got the look. And now they're saying that it has full of new technologies, it's going to be very, very hard to ramp, and it's probably not going to be profitable, or it's going to be a drag on margins for 18 months to come. So what this means to me is if we produce 1.8 million cars this year, we barely are going to produce more cars next year, maybe 2 million, because the Fremont is maxed, Shanghai is basically maxed, and Berlin and Austin, they're going to very slowly ramp. So let's say we produce 2 million, 2.1 million, and then the only addition that comes to this is the Cybertruck. But the Cybertruck, everybody was thinking, or at least I was thinking, that they're aiming for 500 to maybe 700,000 Cybertrucks a year. And Musk only mentioned that they are planning to ramp that production up to 250,000 per year, and even that in 18 months from now. So Cybertruck is maybe only going to add like 100,000 next year. And the reason why this is very, very troubling is, as you're going to see in the models that I'm going to show you, is a lot of us Tesla bulls have this thesis that a big part of the value of the company is going to come from FSD. And FSD can only be sold to Tesla car owners because other cars don't run on FSD. They don't have any way to receive FSD, right? And so that means that if they follow the plan and they actually ramp up to 20 million cars a year in 2030, like it has been communicated, let's say they miss it and it's only 10 million cars a year, they are going to have an insane amount of cars on the road. And that means that whenever they solve FSD, it's going to be a money printer, right? But you need an insane amount of cars to be on the road for this to be a money printer. But if you drastically slow down the production and you only ramp to maybe 4 million, not to 20 million yearly production by 2030, then it means that you have like 1/3 or like 30% of the cars, or maybe 25% of the cars that can receive FSD. So your own addressable market for FSD becomes much, much smaller. And this to me means that the valuation of the company, it doesn't deserve the super high P, because if Tesla is only going to, there is a chance that the next few years we're not even going to grow EPS, because even if we grow the volume of cars, but they're going to lose money on Cybertruck, if they have to do further rate cuts, then the EPS is going to be even declining. So let's say in a good case scenario, we have a flat EPS. And then the car sales are not going to be growing. Here I'm talking, okay, so you have the unit sales and you have the increase in revenue from those unit sales, right? So even if you increase the unit sales by 30%, but you decrease the prices by 20%, you're only increasing the revenue by 10%, right? So if Tesla is only growing revenues by 10-15% per year, then does it deserve a 120p? Heck no. It deserves maybe a 25-30p, right? And that significant, it acts as a double whammy on the valuation of the stock. So I did my own valuation and I want to show it to you guys. So this was my original valuation when I invested into the stock, and it's interesting to see how wrong I was. You can see that I was calculating with 40% growth in unit volumes, and this is how idiotic I was, that for some reason I thought that the average selling price is never going to go down. And this is also another fallacy that I think is very easy to fall into, that Tesla first started selling the S and X, which were very high price car. I mean, it was the Roadster, but okay, the first true mass produced car was the S and X, and then the price went almost half to the Model 3 and Y, and they are talking about going again another half down to the Model 2. So even if they're selling 20 million cars, if 15 million of them are Model 2s, that only acts as 7.5 million Model 3s or 3 million Model S's. You understand what I mean? And I made this mistake in my table that I don't account for the mix of how these cars are being sold, but so I just draw a straight line that the average selling price is always 37 or whatever. I don't know what I calculated with, but you can see I'm thinking with 40% growth 10 years out, a 20% margin, and this was all real when I did this. Tesla had a much higher, like this was pessimistic, because when in 2021 when I first started looking at it, I think there was a quarter when Tesla had something like a 25%, maybe it was a non-GAAP profit, but anyways, so and I was thinking that they will have FSD and then it will further increase the margins, and I got to a stock price of 467, and my target rate of return, which is sort of like a dream come true for me, I'm very happy, by the way, if I only get 15%, was what do you call it? So if the stock is going to be 467 in 2025 and I want to have 30% return, then $276 is a fantastic number for me. And if the stock is below that, it's a buy. And I even revisited this when the stock was at 168. Geez, what a good price that was. But there's a major issue with this valuation, and that is clearly my growth numbers are completely wrong. So I redid this table, and I'm going to make my face disappear. So the way I did it is I went exactly how they break it down in their investor presentation. So if you go down here, you see that they say you have total automotive revenues, energy generation and store value, and services and other revenue. And you can see that it has different growth rates. They don't break down the gross margins, but they break it out in another part. So you can see that I calculated with that the automotive revenues are going to grow 5% year over year up to 2030. And the reason why I'm saying 5% is because it's not volume. I'm thinking with that they're going to still have to cut prices, and they're going to introduce cheaper models. And even if they sell a lot more of the cheaper models, it's not really increasing the price or the revenue of Tesla. But on the other hand, I gave a very handsome growth to energy generation and storage, 20% for many years to come. And services and other, I gave an even better one, which is 30%. And there's a lot of people who were telling me, but Vince, the services is growing and energy is growing. And I know, I'm thinking with it in my valuation, as you can see. Then what was very interesting for this model is that I want to know how many cars do they have on the road, and this number is probably inaccurate. So I'm saying that if they produce 1.8 million, they might have 3 million total cars on the road that are able to download FSD. They probably have more cars on the road, but some of the older versions, they're not compatible with FSD. And then every year when they make new, more and more cars, this number keeps going up. And this is very important because we don't know when they solve FSD. But when they do, then this is basically their total addressable market. And then we have to know what percent of these cars is going to, sign up for having a monthly subscription or, buying FSD, because I don't think everybody is going to buy FSD. So that's also a question of how many people are going to buy it. So I give you the total revenue here that I collected up from all these three. And you can see that in 2030, the total revenue that I have is $186 billion. That's a very nice number. So if we say that their total operating margin, GAAP profit, is 12%, which they did 7% this quarter. So this basically gives them a lot of benefit of the doubt, a lot of cost savings, a lot of economies of scale. Maybe I'm wrong here, maybe I'm too pessimistic, but I'm just going to go with this. That gives them a 22 billion profit, that is, GAAP profit. So now if you put a 30 PE there, and again, you have to think that the growth has slowed down because Tesla seems to be maturing as a company. So I don't think that they can command a 60 or 70 PE anymore in 2030. And that would put their market cap to $670 billion. And here I hear your criticism that I did not think with FSD yet. And this is why I did this model the way I did it. So here you can see FSD subscription, because I don't know when they're going to solve FSD, right? So I wanted to have one that just shows without FSD. And keep in mind that these gross margins and the margins that they have today, it does include some FSD that the customers already pay for. So here you can see I'm thinking with a $199 FSD subscription and a 15% take rate. Now, maybe you can say that this is way too pessimistic. I can send you this table. You can change the numbers. This is just what I thought with. And I'm going to count that 80% of all the income from the FSD is going to go straight to the bottom line. I know people say that FSD is pure profit, but it's not fully true because they have all these chips and engineers, and that is something. So I think that 80% profit is still a very, very, very optimistic number. So then here you can see how much that income would be. And here you can see the total, basically net income, including FSD. So you can see that here in this case, FSD would add 7 billion to the bottom line. And just with the car business and energy business and service business, you make 22 billion. So total, you have 29 billion. And that would give a market cap of $900 billion. And that's in 2030. And the market cap today is something like $700 billion, okay? So this makes it not a good investment for me. In this table, I made it so that the growth is a lot more, so they go back to growing, and I wanted to see what happens then, And here in 2030, we reach a 15 million yearly car production. The growth is 15%, everything else, this is the car revenue growth is 15%. The only thing, so just to keep it short, you can see that here the market cap goes to $1.4 trillion, which is about a 2x from where they are today. And the FSD take rate is still very low. So I give that to you, let's say 40%, that feels too high. Let's say 35% of the people take FSD, and they're basically printing money with this. Then they have 66 billion yearly operating profit. And if you put a 30 multiple on that, you have a 2 trillion in market cap. So The big thing that is not included in here is the robotaxi network. I have no clue how I should count with that. And as you can see, my problem now is when I invested into Tesla, I thought that I'm buying a car company that is very, very fairly valued, and there is zero, you know, the FSD is a pure cherry on top, and you know, the Tesla bot and robotaxi, they are like call options. But with these new numbers, with the slowdown in production, with the, you know, the margins going down, I basically need FSD to happen to even have a not so awesome 2x by 2030, which is, I don't know, like a 15% per year, less than 15% per year return. And I feel that there is no control that I can do on FSD. It's just one day it's going to be announced that, okay, it's here, and then it's here, and I cannot predict when that is going to happen. And I feel that because I cannot predict it, then I hope that it will happen, and hope is not an investment strategy. So for these reasons, I sold 100% of my Tesla shares late before the market closed, and I changed the whole position into a new position, which if you follow the channel, you know that that is Rocket Lab. And I'm going to be making lots of videos about that stock, and maybe I'm also going to be making videos about Tesla if you guys still interested in my thoughts. But for now, this is what I'm thinking. And yeah, I think if, you know, the facts change, it's okay to change your mind, and if your thesis was wrong, it's okay to say that I'm wrong and you sell. So go ahead, let me know in the comments. I know that there's going to come a lot of hate, and some of you guys are going to agree with me, but that's okay. That's what investment is like. We make the market. And please make sure you subscribe to the channel, and I'll see you in the next video. Ciao, ciao.